Hello and welcome to another Monday Report by Bordier. What happened last week is already history if we buy the pending agreement between the US and China on tariffs currently being negotiated in Geneva. Nevertheless, we will remember that the Fed left rates unchanged as expected, with the economy still okay and inflation still above target before the effect of the tariff. China, where inflation is still very low and even negative, especially for producer prices, relaxed its monetary policy and reported an 8% year-on-year rise in exports for April. But as you can see here, exports to the US collapsed by 20%, while those to Asia soared by 20%. In practice, then, China has begun to reroute its exports and may already have found ways to circumvent US tariffs ahead of this weekend talks. These talks could see tariffs fall to 30% on the US side and 10% on the Chinese side, much lower figures than those articulated or hoped last week. All markets are therefore in a risk-on mode this morning. Oil and equities, especially cyclicals, and high-yield bonds are up, while sovereign bonds and gold are down. Last week, in a still uncertain environment, US equities once again underperformed European and emerging equities. In terms of our portfolios, we remain buyers of the Swiss healthcare company Lonza. Lonza is a CDMO. In concrete terms, the company offers outsourced services to pharma companies for the development, testing, and production of drugs. The group has reported a strong level of activity at the start of the year, and the share price is thus continuing the nice outperformance that started almost a year ago. That's all for today. Thank you all for listening, and see you next week.